After a decline that was caused by doubts about artificial intelligence hype and worries about the extent of Federal Reserve policy easing, investors re-enter the market late in the week. Still, investors continue to bet on two Fed rates next year, keeping gold well bid. The real question still remains, will we have a Santa rally? Well, in broader markets, gold won the week with stocks and crypto ending in the red. Crude extended its decline, falling to multi-year lows. For the week, benchmark Brent closed over 1% in the red. The dollar managed to edge higher in the volatile week, with the yen giving up its gains. Japan's 10-year treasury yields jumped to the highest since 1999. While the trades through the week were the opposite of Friday, crypto continues to be volatile, with Bitcoin ending the week below $88,500. Now, with major assets covered, let's shift focus to the Asia-Pacific stock markets. All year, Asian markets have braced for something big to break. The latest moves knocked some of the year's biggest winners off recent highs as tariff concerns resurfaced. Bond yields have spiked, then tumbled, and spiked again. Currencies have swung wildly. For the week, China showed more nuanced trades, but other equity benchmarks in the region ended the week with modest losses. Japanese stocks fell strongly after the central bank's rate hike. Now, in the Americas, several tech company stocks which have come under fire for their lofty AI spending ambitions rallied to boost stock prices on Friday. While that helped the S&P 500 and the Nasdaq erase some of the weekly losses, benchmarks ended in the red. However, Canadian and Brazilian benchmarks defied those losses to end the week in the gain. Looking across the Atlantic, European stocks closed out the week with solid gains. UK's FTSE led in the region, with the Bank of England delivering a rate cut despite a deep divide within policymakers. Rest of the benchmarks also closed out the week in the green. Now, having looked at market moves, let's now turn to the overall economic outlook. In Asia, India remains the best-performing major economy in the world. The latest data underscores the country's solid growth. The uncertainty from U.S. President Donald Trump's trade policies is weighing on the region's growth outlook. In addition, China continues to battle a property recession and a deep deflation from weak demand. In the Americas, mixed messages on the macro front clearly reflect a clouded outlook. The benign inflation report has boosted Fed rate cut bets, but big Wall Street's banks caution that stagflation risks are on the rise. Trump's trade rhetoric extended to other economies in the region, with a negative outlook for Canada and Brazil. In Europe, the standard norm across the region is a muted economic environment. Europe's growth engine, Germany, is struggling to get its manufacturing activity back on track. GDP in the UK contracted for the second straight month in October, with no growth seen since June. And in addition to those concerns, Trump's trade brinksmanship is hurting the economic outlook for the region.